Hello, and welcome to Beyond the Deal, where we discuss business, entrepreneurship, and commercial real estate. My name is Lacey Labs, and I'm here with my co-host Laura Martin, as well as special guest host Karen Niederer. In today's episode, we interview Scott Stevens, First Vice President of SBA Lending with 44 Business Capital, a division of Berkshire Bank. Scott has been in banking and finance for 20 years and brings a wealth of information on commercial lending, particularly SBA lending. Tune into this episode to hear more about Scott's journey, the finance and lending experience that he shares, what advice he would give to business owners and real estate developers seeking financing through the SBA. Scott Stevens, welcome to Beyond the Deal. Great to have you here.
Great to be here. Thank you for having me.
Yeah, absolutely. So let's go ahead and get started. Just tell us a little bit about yourself, how you got started in commercial lending, and a little bit of your personal background.
It's a pretty well-oiled story, and it's kind of funny. I got into banking in 2005 as a branch manager for Sovereign Bank, and then I knew right away retail was not for me. So a couple of years later, I joined Wachovia Bank in 2007 as a commercial lender, small business lender. And then 2008 happened, if we all remember what that. So commercial lending, as I just learned it, stopped. So I turned from a loan producer to a portfolio comber and was just kind of kicking people out of the bank. The bank had also changed names. I don't know if you remember this, but Wells Fargo bought Wachovia, basically pulled them out of the trenches that they dug themselves into. And that also got tired very quickly because my whole passion was about working with small business owners and working on projects, like project type of work. And loans are a lot like that. Wells Fargo at the time was the number one SBA lender in the country. And there was a slot that was about to open for that position at Wells Fargo. I had very minimal experience in it. And everyone I talked to says, you don't want to do that. So I go, okay, well, if enough people are talking poorly about it, there's got to be something amiss. I used to be in the military, so I'd already worked for the federal government. And so I was like, this is probably just paperwork. It's not that big of a deal. So I talked my way into the job with little to no experience in that world. And I've been there for the last 15 years. Wow. So it's kind of interesting. Wells Fargo's model at the time was the only thing I knew about SBA. So once I left there, the world opened up a whole second time. Yeah. Cool.
Yeah, that's awesome. So you're with 44 Business Capital.
Business Capital, yeah. 44, here's the technical phrase. Okay. 44 Business Capital, a division of Berkshire Bank.
So you say the whole thing?
No, I just say 44. Actually, I said the most minimal thing. It's not, people remember it. So Berkshire Bank has a charter that goes back, I want to say like 177, 78 years. Don't quote me on that. Obviously, probably a bunch of different names. But we started partnering with them in 2016, which once that happened, then I opened up the Central PA office. Okay. So, yeah, technically, I'm a banker, but I prefer to be called a lender because bankers just take your money and sometimes give it back. And lenders don't want your money. They want to give you theirs. Yeah. Yeah.
Yeah, I loved your little tagline on LinkedIn with the creative financing piece that you wrote.
I changed that up quite a little bit. I used to be the SBA Sherpa. Yeah. Some people call me the Yoda of SBA. Actually, I call my credit manager the Yoda of SBA. I'm more like a, Padawan or some sort of thing like that.
That's awesome.
Yeah.
Awesome. So you said you really were drawn to the small business loans. What kind of gave you the passion for it? Where was the sticking point for you of like, this is awesome, I really want to do this?
Well, outside sales. So I was in Silicon Valley from like 99 to 2003. Cool. And I got involved in the datacom structured cabling world and worked my way through inside sales to outside sales. Okay. So I loved being out. I loved meeting people. I loved the challenges of projects. Again, what we did was highly project driven. So like Pacific Bell Park in San Francisco, our company helped provide all the cabling for that project when it was done. And I think it was mid 90s, something like that. Okay. So really big projects. So I kind of got that feel for the project mentality and really was drawn to it. I moved back to Central PA in 2003. And I don't know if you know this, but Silicon Valley is slightly different in culture and business than Central PA. So my datacom career in Central PA was very short-lived because I was like, this isn't the same. Yeah. We went from quoting like millions of feet of fiber and twisted copper to hundreds of feet. And it just wasn't as nearly as exciting.
So what brought you to Central PA?
Well, I was born and raised here.
Okay.
I left in 1991 for college and then the military, moved around a lot, and swore I would never move back permanently. And then I had a kid. So,
there you are.
Yeah, and I couldn't afford a house in Northern California, which at the time, I think the average house price was like $600,000. That was 20 years ago.
Wow.
I don't even want to look up that math now.
Yeah, no.
So Central PA was the kind of the easy choice, but it was also a little strategic because I figured, the affordability was there. My parents were getting a little bit older. My sister didn't live near them. Mm-hmm. So it was a little bit of a generational thing too. Mm-hmm. And I wanted my kid to know his grandparents and stuff like that. Mm-hmm. So I'm happy I moved back, but for a long time I would have swore I would have never done it.
A lot of people say that.
Especially after living it, it was fun. I got to live in Boston and Atlanta and Vail Valley and Northern California. So I got to see some places, but I'm glad to call Central PA my home again.
Yeah, that's awesome. So for our listeners, can you explain to us a little bit, what is it that you do? What is SBA? What are SBA loans? What is your kind of pitch when you're talking to a client? What do you do? What's your job?
So my job is really to be a resource for people who talk to small business owners. And small business owners, I always like to say, can be anyone from someone starting a company, someone spinning off a company, someone going off on their own, all the way up to someone that runs a $15 to $25 million company. So small is really relative. Mm-hmm. My approach is really to be top of mind when someone has an issue. And that issue usually stems from, hey, we talked to our bank and they can't help us. Mm-hmm. Or we went down this path and got nowhere, or whatever. The nice thing about my current kind of situation and my approach to the market is I don't call on any customers. Mm-hmm. So I don't pick up the phone and say, I want to, in sales, you're like, I got my top 100. I'm going to keep working them and find business. Mm-hmm. It doesn't really work well for what I do that way. Mm-hmm. So I'll have maybe a top 100 referral source list. And those could be commercial realtors. They could be business brokers. They can be other bankers. Mm-hmm. They could be other SBA lenders. They could be transactional attorneys, accountants, you name it. Mm-hmm. So that's kind of my approach. And it works out really well. So when they hear trigger words like partner buyout, or I want to buy a business, or I want to buy a building and I don't have 20% down plus closing costs, or any of those things, I am typically brought into a conversation. And that usually happens after their more conservative, local bank will say, yeah, we can do it, and it's going to cost you this. And I say, I can do it, and it'll cost you this. Yeah. And the big difference is how our firm really approaches SBA lending and how we want to support small business owners and business owners in general. Mm. And it really comes down to the age-old equation of time and money, right? A lot of times people waste a whole lot of time in a failed process, or they don't even have the money to buy into the game. Mm-hmm. So that's kind of how I look to support small business owners. I would say if I had a readout of all my transactions and what made up the most, it would probably be ownership transitions. Okay. Right. So if you wanted to buy a business or Laura's business from her, I could help finance that. Mm-hmm. Well, what's the problem with that? Well, there's usually no collateral. Yeah. Right. Businesses have a lot of ability to generate cash flow. They have, a great management team. They have a deep pipeline. And you look at hard assets, they don't really have a lot. Mm-hmm. They can, but even the very, manufacturers, very equipment-intensive businesses, when you look at really what that's worth at that time and what it's worth a year from now and another year from now, it's kind of a slippery slope. Mm-hmm. So banks always seem to, or commercial and conventional lenders always seem to look at things through a loan to value. LTV is a big thing that people bring up. Right. My loan, I'll do X amount of percentage based on the value. Well, what's the value? It usually has to be an asset, like a piece of collateral. Real estate's a great example. Right. So if someone wants to buy a building for their business, they talk to their commercial lender at ABC Bank and say, yep, 20% down plus closing costs. Yeah. Well, that business owner is like, well, if $1 million business, that could be $230,000, $240,000. Yeah. I don't see a lot of business owners that sit on that type of money. Yeah. So what do they have to do? They have to borrow it, or they have to do something else, or they just say, well, I'd love to do it, but I can't. Mm-hmm. So, I can come in and say, all right, let's look at your business's ability to generate cash flow. Let's look at what you're currently paying in your lease arrangement. Is it triple net? Are you paying this? Are you paying that? A lot of people are paying everything. And when you add it all up and then look at the benefits of creating a loan that's specific to them at a much lower threshold, maybe 5% instead of 20, it's very compelling. And it enables them to do stuff that they otherwise couldn't. The last example, most common example, is really just ownership transitions. I'm 51. So if I owned a business, I'd be looking for someone to groom to take over my business in 10 to 15 years. So succession planning is really big, and ownership transitions can take a variety of forms now. And the SBA can be partner buyouts, straight up acquisitions, stock redemptions, partner buy-ins, which is a term new to the SBA. It hasn't even been a year, so that's been a reality. So it's a pretty exciting world, especially when you have the tools to do what 90% of people around you can't.
Yeah, that's awesome.
You're a creative lender.
Creative, right?
Lender,
Yeah, outside the box, all those catchphrases.
Yeah.
But I think if we do anything, we are really good at collecting data, understanding situations, providing feedback, good, bad, or indifferent, very quickly. So I had a recent example of a customer that was referred to me a couple different ways, which is always fun.
Yeah.
And talked to them, and they were frustrated because they're like, yeah, it took 2 months, and the bank finally came back and said no. I said, well, they, probably because they were hoping they could do it, and they kind of just took a chance. And said, we're not doing this deal. They said, why? And I said, well, because this, that, and the other thing. They're like, okay, can we change that? I go, yeah, if you want to change that scenario, here's what I would tweak, and we could reevaluate. But right now, we're a no. And they're like, thanks?
Yeah.
So it was like 3 hours
Yeah.
versus 2 months.
Appreciate that.
Yeah. And oftentimes, those people are some of the most likely people to come back.
Yeah.
Yeah, because they know that you're not going to BS them.
Yep.
Yeah.
Yeah, and they're business owners. They're running a business. They don't have time to sit around.
Time and money,
Yeah.
right?
So you can do 5% down. Is there a maximum loan you do?
So that's a great question. That changes a lot with some of these programs. We predominantly work with the SBA 7A loan guarantee program, which is kind of the granddaddy of them all.
Okay.
People often say 504. Well, that's also an SBA program. It's relegated to just real estate. Okay. But 80-90% of the deals out there have nothing to do with real estate. They're starting businesses, they're expanding businesses, they're buying equipment, they're buying a partner out, they're doing whatever, leasehold improvements, construction.
Yep.
So, when it comes to loan limits, typically the SBA operates from about $5 to $350,000 in what they call the express world, which is a world that I don't really participate in. Our bank does. So, I can definitely redirect people if they have a smaller loan request. And then you have $350 up to $5 million, which is a pretty wide amount of money. Right. And $5 million isn't all that it used to be. In 2010, the Obama administration went from $2 million to $5 million. That was a big jump. Everyone was like, oh, great. Finally, we could do these big deals. And now you get a $2 or $3 million deal. And you're like, that's not even really that big of a deal anymore. I mean, you look at eggs, right? It's kind of the same with like loans. The answer to your question, though, is, if we see a deal, let's say it's someone wants to buy business. Like I own an HVAC company. I want to buy another HVAC company somewhere, in another market, like close to me. So the limit used to be $5 million. And it still is from the SBA standpoint. But our bank has decided to engage in what we call pari passu loans, which is we'll do a conventional loan that doesn't have a guarantee, that has the same shared collateral position, same terms, same interest rate, all that other stuff as our SBA loan. And we can go up to $10 million, which is quite exciting.
So 5 and 5 or 5 and 10?
It would be 5 and 5. And if it was 7 million, we'd do 5 million SBA and 2 million. So we always try to maximize the guarantee because that enables us to do deals that we otherwise wouldn't. There's also USDA.
Yeah.
I've been in the business 15 years. I've never closed one, and I got one that's really close now. And that they go up to 25 million.
Wow.
And the one I'm working on right now is just over 10. So it's really exciting.
Yeah.
But it hasn't closed yet. So I'm not counting my chickens
Literally.
before they
What kind of loans will they do? Just land?
with USDA.
Yeah.
So USDA, not an expert. That's my disclaimer. But the USDA has a B&I program that's focused on businesses. They will, from time to time, have different focuses. Like a current focus is food supply chain security. Yep. So if you have a business that like makes hot dog buns or something like that, you may qualify just on that premise. Mm-hmm. You may not even have to be in a rural area to qualify if you're in that program. So they have a website, you go USDA.gov, I think it is, and you can go in there, put in an address, and see if it's eligible from the kind of traditional standards. Mm-hmm. Like Harrisburg technically is rural, but Lancaster's not. It's weird.
And yet they have more farms.
They do it on population centers, and it's all driven by their map. So I always tell people, if you are interested in USDA loan and you have the patience for it, I'll be happy to talk with you. Go to the website and let's talk to a local rep from USDA and get involved there. Yeah.
So you can do less down. You can do quicker answers. What's the closing process?
So we have a 3-step process. It's pre-approval, underwriting, and closing. Every step gets more and more intensive with paperwork, and it ends with money being dispersed. So I always equate it to a pre-flight checklist. If anyone flies a plane or has been in a plane, you know that 100% of that checklist has to be complete. That's why we sit on tarmacs for 3 hours, because they're replacing a wheel on the plane or something like that. Mm-hmm. They're not going to take off without a full checklist. So I set that expectation up front with folks. The nice thing about our organization, we have 65-ish employees, and we do everything. So we don't lean on the bank to provide any other help. So if you had a client, you referred to me, Laura, that they would talk to me, their underwriter would be 44, their closer would be 44. 3 years later, if they moved houses and needed to do a servicing action to their loan, they would talk to a loan servicer from 44. We do everything in-house. We're kind of like that nose-to-tail butcher, but with loans. Speed is really the key. So, customers are funny. If you talk to anybody that provides money, I don't care if you're a mortgage lender, a commercial lender, an SBA lender, we all experience the same thing. You ask a client for some paperwork, let's say tax returns, asked them 2 weeks ago. And the second after they submit that to you, they want an update. Mm-hmm. Like, well, you took 2 weeks to do this. I can't spontaneously give you feedback. Mm-hmm. But I always try to tell people I'm not going to be the bottleneck. I will match your pace. I will not outrun you, and I'm not going to underrun you. Mm-hmm. So we're going to run it. If you're an 8 mile runner, an hour runner, we'll do that. If you can do a 10-minute mile, I'll do that. We can jog, we can walk, we can sprint. And in the lending world, I can sprint. I probably wouldn't do a very good job in the real world sprinting, but speed is really key. And people need to understand early on that, we're a big investor. If you're getting 5% down on something, that means we're a 95% investor. Yeah. If you were my friend and I wanted to buy a building and I said, I can put 5% in, can you put 95% in? Yeah. You would have a big say in stuff. Yeah. Mm-hmm. So people need to kind of recognize that. I said, look, we are a bank, but think of us as an investor. You got to kind of kiss the ring a little bit, because we're putting a lot of money into this. You're putting decent amount of money into it. Yeah. But even if you're buying a business with 10% down, we're still doing 90% financing a lot of times. Mm-hmm. So when people kind of understand that, and they know that, we kind of have to cross that finish line together, no one can be ahead or behind. It usually works out real well, and they're appreciative of that. Yeah. Especially when you show them that you work on weekends, and you send emails back late at night if something's urgent.
Yeah. What kind of interest rates? Do you tend to be a little higher?
So people think that, and it's largely true. But here's what I say about interest rates, and this has been I've dialed this in over the last 14, 15 years. They're always awesome, and people are, what are you talking about? Rates are high. Well. Not if you have a $500,000 money market account. Yeah. Are you complaining about the rate? Yeah. You're not. Yeah. So it's really a question of how are rates relative to what I need? Yeah. Do I want a high rate of return on my cash, or do I need to borrow money? Yeah. So those are the two tribes. So the interest rates are always great. The one
I like
one underspoken thing about SBA that people don't know is it's a federal program. And federal programs are usually always pretty good at consumer protection, transparency, all sorts of other stuff. Yeah. And that really comes down the same with SBA. So in our world, we have no loan covenants. We have no balloons. I can't call your loan if Berkshire Bank is bought by another bigger bank, which is what I did in 08 and 09. We would call loans and say, hey, you have 90 days to refinance this or we're going to start a default. We can't do any of that with an SBA loan. Yeah. Same thing with interest rates. What's it called? Merchant advances or what's the term? Oh, man. Like if you're, I'm going to struggle with the term. It just eluded me.
Well, but maybe what I've heard too is fees are higher to get in, but maybe your interest rate's better. Your terms are better.
Well,
longer lock-in.
What I was going to say about interest rates is they're regulated, right? Okay. So it is based on an index of Wall Street Journal Prime, which is 8.5 right now.
Okay.
So if someone comes to me, even with the riskiest of deals, I can't charge them more than 3% over that index. Okay. So that's 11.5%, which sounds pretty high. But compared to some of the other unsecured loans that you can get by Googling, hey, I need money for my business, and you're paying 14, 15%, and you're making weekly payments on it through your credit card machine. Right. Merchant, I'm going to kick myself tomorrow when I this term. But those are predatory. And sometimes people use them because they're super convenient. Mm-hmm. If it's super convenient, it's super expensive. That's usually the case.
Do you guys do prepayment penalties?
So the SBA doesn't allow for prepayment penalties on their standard loan, the 10-year loan, if you have a real estate loan or if you have a loan that has real estate and non-real estate use of proceeds. 15 years is the magic number. So if you have a loan that's 15 years or 20 years or 25 being the max, there is a 3-year prepayment penalty. So in year 1, it's 5%, year 2, it's 3%, year 3, it's 1%.
Okay. Beyond that, you're good.
But yeah, beyond that, you're good. If you do a partner buyout and you do a 10-year loan, you just got to give us a 21-day notice, and we'll take care of it. Usually people are paying off early. So it's usually 50% for a 10-year loan or maybe a rule of a third for the real estate loans. If you do a 25-year deal on real estate, you're usually refinancing in year 5 to 7. Yeah. If you do a 10-year deal for a partner buyout, you're usually paid off or you're refinancing by year 5. Yeah. So these loans are really good for the time that they're there. Mm-hmm. And they allow customers choice for how they're going to exit. And unless you're doing a major refinance inside that 3-year window compared to 25 years, it's a pretty short prepayment period, if you ask me. Mm-hmm. You're not going to get penalized for that. As far as loan costs, the SBA guarantee fee is really the only thing that consistently is not a part of a conventional loan. But then again, we can't charge doc prep fees or origination points and all sorts of other stuff. Mm-hmm. So when you really look at a closing cost grid you get one from a conventional lender and one from me, it's not, title insurance is the same for them as it is for me, or an appraisal is the same for me as it is them. Yeah. A lot of these costs are very consistent between the loan programs.
So it's a really good loan for someone that's wanting to get started. It gets them in the door. It helps them. It can.
Now, as far as that is definitely accurate for SBA. In reality, though, most people don't really have the gas to start a business. Right. A lot of people think, oh, it's SBA. They should finance me 100%. Nope, they don't. 10% down is typically the case. I talked to a gentleman yesterday, another double referral. So a broker put me in contact, and then a guy I knew from the gym put me in contact with them as well. And the short story on that was, they wanted to buy a business for $1 million. They wanted to build a building for $2.5 million. And I said, this is a pretty robust project. He goes, what do you mean by that? I go, well, by the time you add all this stuff up and look at closing, it's about $4 million. I go, how much do you have to put in? He goes, what do you mean? I go, well, what are you contributing? He goes, I got like 40 grand. I said, even if you put a 0 behind that, you would just be scratching the surface of eligibility. Mm-hmm. So people have that misconception. But, a more honest kind of startup, or hey, I've been a baker at Pennsylvania Bakery for 10 years and I want to go out and start my own bakery. If it makes sense, a lot of times those folks don't need millions of dollars. They need $200,000, and that's why the Express program is there. So there's, lenders will typically like to do a lot of smaller deals or fewer large deals, and we're the latter. So, I tell people there's a cycle of business, the life cycle, startup, growth, expansion, generational transfers, all that other stuff, and then exiting. So the SBA program, the 7A program, which I always call like the Swiss Army knife of SBA because it can do anything. It can do real estate, it can do buyouts, it can do startups. 504 they do all sorts of things. Real estate, they do real estate, and they do real estate. Yeah. The 7A program can kind of address no matter where you are in that life cycle, it can address the need there.
So what are your minimums?
For us, our minimums are 350.
Okay.
And that's what the SBA calls the large loan program. It's 350 and above. Okay. Our bank still does express loans. I just have nothing to do with them. Yep. We don't do startups in that space. We don't do ownership acquisitions. Here's the reality. If someone wants to buy somebody else's business, if it's $200,000 or if it's $4 million, it's the same paperwork. You still need the same legal paperwork. You still need the same purchase agreements. You still need the same level of due diligence. Yep. So from a cost to size of loan standpoint, it's very expensive on the $200,000. Yeah. It's more common on a larger deal. That's one of the reasons that we don't really do those types of deals in that small space. Because it's too expensive for customers a lot of times.
So 350 and small business. What other are kind of the eligibility checklist things that you look for in a client when you're in a conversation?
It has to be a U.S.-based business. Okay. It has to be for-profit. Sorry, nonprofits. Yep. Has to be for-profit. It can have mixed ownership. Okay. I did a deal in Messina, New York, that had a 50% owner who is a U.S. citizen, 50% Canadian. That was fun. Yeah. So those are the big ones. You have to be a U.S.-based business. You have to have ownership. The owners have to be in the United States, or at least the majority of them, or half of them, in my case. So those are typically the eligibility requirements. We've seen a lot more recently larger businesses being disqualified because they're too big. There's lots of rules of thumb when it comes to that, but typically, if you're over $20 million in revenue, we're probably going to struggle qualifying you. Although there are carve-outs for different types of industries and different, employee counts and stuff like that.
That's net revenue.
Yeah, you can look at an average 3-year run of EBITDA, and if it's below, I think, $5 million, you can do it. But we don't kick anybody out the door just because of a basic number. If they say, hey, I'm a $33 million revenue company, I'll usually say, well, what industry are you in, and what was your bottom line last year? And what are you trying to do? And we'll look at it internally and give feedback very quickly to the folks that, yes, we can use this size standard, is what they call it. We can use size standard B or the alternate size standard, and we can qualify you. But oftentimes people, they're not used to getting that fast, accurate feedback. So we try to qualify them very quickly. And that's the whole point of step one of our process. Yep.
So what are some of the biggest obstacles that a potential lendee faces? Obviously, you've said money down is a pretty big one, and then size of the company potentially.
Well, I think most of everybody is referred to be is eligible. Okay. Right? It's very rare that maybe 1 out of every 30 deals or so. And it's usually because they're a nonprofit or, occasionally they're too big. I would say challenges in the process of obtaining a loan are just expectations. That's why I use that flight checklist a lot of times. And I use hey, we're putting 90% into this. If I were your buddy from college putting 90% of this money in it, you would not be talking to us this way.
Yeah. Right.
So needs to be a mutual level of respect and expectations. I always tell people this is really simple. It's just paperwork. You do paperwork on white paper, and then when it finishes, I give you paper that's green and it has presidential faces on it, form of money. And they're like, oh, great, yeah. I'm like, you're just turning white paper into green paper.
How's your success rate? I mean, do you have a lot of loans that go bad?
Loans always go bad, right? If a loan never goes bad, if you have a loan portfolio that doesn't have a loss, you're not in a lending business. You're in something else. Yeah. So our bank typically looks at a loan default rate of less than 1%. Which is awesome. I had the only loan I can think of that went bad recently was during COVID and had zero to do with COVID. Someone bought a dental practice. My client bought this dental practice, and he did not respect and or engage the lab manager in a way to make her feel valued. And then a couple months into it, they had a fight, and she left and took 90% of their clients. So that business failed fast.
Oh, wow.
And that was all because of pride
Really?
and attitude.
Yeah.
Had nothing to do with COVID, nothing to do with the pandemic or anything else like that. But
That's impressive because you're doing a lot of what people would consider risky loans.
yeah, but a lot of times people want to get out of them as soon as they can too. So I had a long conversation with a client they're all over. They're like DC, Annapolis, Western Pennsylvania. They do IT services. And we were talking through this, and there's going to be 3 personal guarantors, and all 3 of them have to pledge their house, right? Because the SBA requires that we seek to collateralize ourselves, even with personally held collateral. The rules are very black and white. There's usually not a lot of disparity between lenders on that. So I go, this is how this has to be done. And he goes, okay. I said, but if you guys get into this for 2 years, then you can do ownership changes. There's no prepayment on this deal. I just ask you to keep it a year at least, because we need to make money too.
Right.
So the conversation evolved from talking about the feasibility of doing a loan to what are my options for exit. And I always tell people, you need to figure out, it's equally important to figure out how you're going to borrow money and how you're going to get out of that loan.
Yeah.
So we went an hour and a half, maybe spontaneous kind of Teams call, went through about 5 different scenarios. And the one they landed on was, all right, great. We just need to be okay with this for 2 to 3 years. And then in year 2, we need to start talking to conventional lenders. I said, exactly. Because by then, you'll have that 2 to 3 year track record of profitability.
Right. Yep.
Right now, you got 6 months. Yeah. No one's going to touch you.
Yeah.
Not without an SBA guarantee.
Yeah.
So.
Yeah.
There's a need for the SBA.
Definitely.
Yeah. I mean, look, these loans are 10 years, 15, 20 years. No one ever takes them to term. And that's kind of by design. Our rates are always variable, so they're always good. Back to my first joke about what
I like
rates
that
are at.
line.
Yeah.
But these programs are designed to satisfy the needs of the client for as long as they have that need. If they get out of that need and they're elevated and now they're rocking and rolling and they don't need it, they'll just pay it off or get it refinanced, and that's okay. We want to see them do that.
Yeah. So your general territory area, it sounds like, is kind of mid-Atlantic region. Is that accurate? Or
No, all 50 states and U.S. territories.
Okay.
You can do that.
Yeah, Marshall Islands
Wow.
in the South Pacific.
You want to go visit some of these
I do.
places.
Yeah, I do. Puerto Rico.
Hopefully this podcast reaches.
Yeah,
into
yeah. My biggest reach has been Alaska.
Wow.
Yeah, and that was like an old Wells Fargo connection that came out of nowhere. They reignited on LinkedIn, and then I was like, sure, I'll take a call.
Cool.
And I approved that deal in like the first 5 minutes.
Wow.
They sent over tax returns while we were talking, and I go, okay, yes, we're in.
Yeah.
Businesses, when you look at enough tax returns, you can tell. And look, I don't want to pay more taxes than my fair share. I get it. But some businesses take it to a whole different level. Yeah. And some are like pretty pragmatic about it. I looked at this and I forget the guy's name. It's Adam, maybe? Doesn't matter. I go, dude, like, this is done deal. He goes, how do you know? I go, I'm not even on page 2 of the tax return on your subchapter S tax return. Your EBITDA is off the chart. And I'm like, you're getting a great price on this. He's like, how do you know that? I'm like, let's just do the math in my head. It's kind of fun.
Yeah.
Yeah, so it can be anywhere in the United States. We typically there's details to it, but basically, a lot of banks are constrained by geography, or they don't have an SBA group, or their SBA group's a little bit more conservative. That usually keeps me within 2 or 3 hours of here. But I have 2 deals in Kansas City, Missouri right now. I don't know why. I can tell you why, but it's just random. You just never know. And with people being so remote and people handling more clients, it's not just 30 years ago, you handled clients that you could go out and visit face-to-face all the time. Yeah. Now people are handling clients on an international level, national level, regional level. So.
Yeah. Zoom really changed the world, right? Like,
yeah, I'm a Teams man myself.
Teams,
But yeah, Zoom, those types of things really changed it. It made us more efficient. But it's always good to balance it out where you can with the face-to-face stuff too.
So it sounds like if someone calls you, you're going to know in a couple of minutes if there's a possibility
If they have a decent amount of data, Laura, yeah, absolutely. Like
call to float the
through
ideas.
this. Yeah. It really comes down to what they're asking for. And because there's different rules for different scenarios, people want to refinance debt a lot. Mm-hmm. That's very tough to do.
Right.
Because if you've had a late penalty or you've missed a payment in the last 12 months, I'm dead in the water immediately.
Yeah.
I had a conversation this morning about it. My buddy at another bank was like, hey, I know it has to be the exemplary payment history in the last 12 months. They had a late charge in November. I go, of 23? He's like, yeah. I go, can we talk about this in November of this year so we can put that 12 months behind us? Because otherwise I can't do it.
Yeah. It's good, though. You're very clear about what you can and can't do.
Yeah, it helps people out. And I always try to tell people this, like my value proposition isn't to do a loan for you. My value proposition is to provide value to you in any way I possibly can. If it's redirecting you to a professional that I think would be more helpful, I'll do that. Mm-hmm. If sometimes I get a loan and I'll be like, why do you need me? Mm-hmm. They're like, well, I was referred to you. I'm like, yeah, but this is really strong. Mm-hmm. Like, and if you want to put 20% down or whatever, like, who do you know? Oh, I don't know anybody. Like, I'll give you 3 names. They're all awesome. Mm-hmm. Talk to them. Mm-hmm. So, and then the other thing too is like, oftentimes people come to me and they'll already have an SBA solution from a different bank. Mm-hmm. I remember an instance where M&T was a great SBA lender. They had a term sheet out, and I looked at the customer says, I have this thing from M&T. I go, that looks great. Why are you talking to me?
Yeah.
And they go, what, you don't want it? I go, this looks great. Like, I could probably do the exact same thing, but why? Mm-hmm. You already have a bird in the hand. Go for it. Yeah. And also, because we do a lot of reciprocal business, so I don't want to bite the hand that feeds me. Yeah. And it kind of comes down to, a level of respect in the industry, reputation, that sort of stuff. So I always try to help people with, hey, you have a 500 credit score? Here's some credit repair links that you could use and start doing it now. I don't want to pay that medical bill. It's $130. Pay it. Yep. I had a guy right when I got in the business, like 15 years ago. Credit came. That's why I was at Wells Fargo. Wells Fargo is if you have like less than a 700 credit score, you're probably just dead on arrival with them. Mm-hmm. Ours is a little lower, and we're open to stories because we like stories. But this guy, he had like 4 businesses. He drives a fancy car. He's got his personal financial statement. Like, wow, maybe one day I'll get there, kind of thing. Mm. He had a 620 credit score.
Wow,
because he had like 3 medical bills. He's like, I won't repeat what he said to me about these medical professionals. I go, dude, it's like total like less than $500. Like you're worth like $50 million. Like pay it off. Like the credit bureau doesn't care about the reason why.
Yeah.
It's
thank
just
me
a matter
later.
of you bury your pride just a little bit, $400, $500 worth, and get it better.
So interesting.
It's wild.
You could write a book with all these stories.
Yeah. And there's also organizations out there like SBDC and SCORE and some other services that are no cost for business owners to look into. I always try to remind people of that because, I might tell them something and they might be taken aback by it. I'm like, I'm not saying it to be rude. I'm just saying that this is the way the world works, the other financing world works. So get some more input.
So to be a little bit technical, you've used the term a few times that I'm not sure that I know what it means, and I'm thinking maybe some of our listeners won't. So what is EBITDA for EBITDA?
EBITDA, yeah.
EBITDA.
Earnings before interest, taxes, depreciation, and amortization.
Okay.
I think so. Yeah. So when you look at somebody's financials, or you look at a tax return, you have revenue, gross revenue, you have cost of goods sold, then you have operating expenses, and then you have your profit. Well, a lot of those operating expenses are non-cash write-offs, right? So interest expense, depreciation, amortization, sometimes taxes if you're a C corporation. We would add to EBITDA owner compensation, fringe benefits of owners. Basically, hey, this is how the business is reporting its profitability today. Mm-hmm. But as the potential new owner of the business, I want to know what all expenses will cease to exist when I buy it. Right. So you have EBITDA plus all of those things that go into SDE, which is seller discretionary expenses. Okay. And boy, can they be discretionary.
Yeah.
I've seen condos in Hawaii. I've seen boats, ghost employees. People always get nervous when you start talking about it because they think the IRS is listening.
Yeah.
The IRS doesn't really care.
Yeah.
What we do in correcting those things is really to reflect the reality of what the business is going to look like more. The SBA is more concerned about helping lenders support the fair and equitable transition of ownership to a new person than it is about a $20,000 salary that you paid your daughter that never showed up a day at work, right? They're there to support business. Small business is the biggest employment industry in the world, in this country. So anything that they could do to help keep people employed or help businesses grow strategically to help with those employment numbers, they're going to do it. So
cool. That's very helpful.
And I used LTV, loan to value. That's a pretty straightforward term, but I know even people that aren't lenders use that a lot. I'm like, cash flow.
I think you did define that earlier.
Cash flow is what, cash is king.
Yeah.
Collateral is queen. Yeah. A lot of lenders are looking at collateral. And I always tell people the reason they're going to look at a collateral, I'll give you a local example. I did a bed and breakfast loan in 2021. And they had a conversation with another local bank. And they talked to me. I gave them a term sheet. We were going to do 15% down. I was going to finance the rest. It was a decent sized loan. And they're like, okay, great. Well, we'll think about it. We'll get back to you. A week goes by. No big deal. 2 weeks go by. And I'm like, I'll send a text. Hey, what's going on? I didn't hear back. 3 weeks go by. I get an email. The email subject line was humble pie. And the customer goes to explain. She goes, sorry, went dark on you. We were talking with ABC Bank, and we really thought we had a great deal going. The rate was great, all this other, but their LTV was a little lower than yours. Give me a call to discuss. So I get on the phone. She's like, yeah, you were 85. I go, what were they at, 60? She goes, 50.
Wow.
I said, she goes, their rate's awesome. I go, I bet it is.
Yeah.
Because they're financing half of that property's value.
Yeah.
And she goes, yeah, it is great. She goes, we don't have that money. I go, so do you want to do the deal with me or are you just going to, yeah. And then they didn't do this, but what oftentimes people go, well, I would, but can we take their rate and make it your rate? I go, my rate's not that much higher. And no, they're giving you a solution that's not, you can't execute on that.
Yeah.
I'm giving you something that you can.
Yeah.
But you hear these stories are always kind of out there.
Yeah. Yep. Very interesting. All right. Well, we're actually going to head into wrapping up.
Okay.
We have 2 closer questions that we usually ask. So the first is, what advice would you give to a potential client, a business owner, someone looking to buy real estate, anything that would be SBA? What advice would you give them before they start the conversation or coming into the conversation?
Yeah, I would say have a clear idea of what you're asking for. What's your budget? What do you need it for and why? And then equally importantly is have your financials dialed in. Have a personal financial statements. The best clients I work with always keep an updated one. And if they don't, they'll produce one for you quickly. Tax returns, financial statements, personal financial statements. Just having your documents ready, being savvy with being able to share sensitive information in this new day and age. Pre-COVID, or actually you go back even further, when I was at Wells Fargo, when we sent a deal in, we actually sent the deal in.
Like mail.
Like paperwork.
Yeah.
With like paper clips and stuff. Do you remember those?
Yeah.
And we put them in FedEx boxes. And I'd subscribe to the newspaper, not because I really read the newspaper that much, because I needed stuff to crumple up to put in a box so it didn't slide around.
Yeah.
It would overnight them. That's how the loan process started as recently as 2015.
Wow.
Now it's digital. It's in the cloud. And people sometimes are a little weary of that. But I always tell them, I go, if you give me a physical tax return, I will not accept it. I'm not taking that risk. So that means that people need to be familiar with Zoom and Teams. So that's also advice. Like you don't have to be a tech nerd, but be tech savvy enough to know how the business community works nowadays. We do everything in a cloud-based, secured one-way kind of encrypted data collection system. It also doubles as their checklist. So used to be 10 years ago, hey, where's my loan at? Let me talk to the loan closer. 2 days later, loan clerk, hey, here's the list.
Yeah.
But now that list is already old because all the other stuff has been sent in.
Yeah.
Now it's like you send it in, it goes right into the slot, it gets reviewed. Yes, this is good. No, this is bad.
Yep.
They know it right away. So, yeah, having your finances dialed in, being good with tech, and knowing what it is you're asking for. Because it's not our job to tell you what you need.
Yeah.
It's our job to tell you if we can provide the solution that you're looking for.
Mm-hmm.
Do you do physical closings, or is it pretty much all online now?
Yeah, it's all over the place. It really depends. Some borrowers like it all virtual, or they'll go in and they'll sign with their attorney's office, and the seller will sign to their attorney's office, and they can do it that way. Sometimes sellers will come in, and then an hour will go by after they leave, and then the buyers will come in.
Yeah.
It's a little bit of this type of thing.
Mm-hmm.
I always like to go to settlements whenever possible.
Mm-hmm.
Obviously, I didn't go to the one in Alaska, but
Would have been a great trip.
it would have
You
been
like cold weather? Be perfect.
yeah. Today would have been awesome. But there's still a lot of traditional type of elements in this job nowadays. But face-to-face visits, you kind of squeeze those a little tighter now because you don't get to do them all the times. And the closings are great because I always tell people early on in the process, my goal is to get all parties to the closing table and get the loan done, and everyone have a smile on their face when it's done. Now, does that happen all the time? No. Sometimes sellers are just grumpy.
Yeah.
Sometimes buyers are grumpy, but
Yeah.
oftentimes it works out really well.
Yeah.
That's awesome.
All right. Last question. We
Yeah.
ask every guest the same one. If you could go back and start your career over, but keep all the knowledge and experience you have to start it over, what would you do differently?
So this is the question I did read, and I thought about this one.
Love it.
I love the phrase, everything that's happened in my life to this point and yours is put us where you're at, where I'm at, where you're at, where you're at.
Mm-hmm.
So I always like that makes me feel good because I'm pretty happy where I'm at. Mm-hmm. And so far as I know, no one's been able to do that. Magic wand it and go back. Yeah. That being said, that's my disclaimer. That being said, I was really gung-ho coming out of high school and wanted to go into college. And I also applied for Navy scholarship and an Army scholarship. Navy was my primary, Army was my backup. Mm-hmm. I didn't get the Navy one, I got the Army one. Mm-hmm. So I went through ROTC. And my focus in college was really more of the Army side of things than it was. I mean, I went to Boston University. It's not a slouchy school. But the one thing I would change, Lazy, is I would have just gone into the Army and delayed college a little bit. Because I feel like my college experience, although great, could have been really a lot better. And I'm advising my kids now as they're thinking about this type of stuff. Like, you don't necessarily have to go to college right away.
Mm-hmm.
Why don't you go grow up a little bit, get a job, go to community school, go into the Air Force, whatever it is. Mm-hmm. Spend a little bit of time. Outside of that, I mean, if you told me 20 years ago I'd be an SBA lender, I'd be like, okay. I'm not going to work for a bank. I'm not going to do any of that stuff. I don't like suits. Yeah. I don't want to have, I don't want to fit that mold at all. And I think I've done a good job balancing not fitting the mold, but also kind of creating a little bit of a new mold moving forward. Yeah. I think the college experience, delaying that a little bit would have been helpful for me. But, all paths have led me to this point. So I'm very fortunate for that.
Mm-hmm.
Yeah, with higher education being so expensive, I think that's
can't even imagine.
Yeah, interesting. Yeah. Good advice.
We had a what they call a bootleg T-shirt when I first day I showed up to Boston University, and someone was selling T-shirts for like $5. Yep. It was a picture of a Porsche 911, and it said "BU 0 to 100 grand in 4 years." Now it's 85 a year.
Yeah.
Wow.
It's 85,000 a year. It's crazy.
It's crazy.
Yeah.
So I would have taken a little bit of a different path there.
Yeah. Well, thank you so much, Scott. It was really great to have you on.
Thanks for having me.
Yeah,
thanks for
pleasure meeting you.
Yeah, absolutely.
That was Scott Stevens sharing his insights on SBA lending in Central PA. For more information on Scott, 44 Business Capital, or to learn more about SVN Latus, click the links in the show notes. Thanks for listening to Beyond the Deal.